Hi, and welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, coming to you from the ETF Exchange Conference in Miami Beach, Florida. The industry now has $8 trillion in assets, but it needs to keep on growing, and that's what we're here to do, talk about how the industry can keep on growing. And by the way, this is not a phony backdrop. This really is the beach in Miami Beach. Wish you all were here. It's going to be a fabulous day here. What's hot and what's not in ETFs, that's what we're here to talk about. Alison Doyle, head of ETP listings at Nasdaq, is with us. Tony Rochte is the global head of ETFs at Morgan Stanley. And Rob Harvey is the vice president of Dimensional Fund Advisors. Alison, let's start with you. You're running things for Nasdaq, the ETF business. What's hot here? Give us 3 or 4 topics that's on everybody's mind right now. Yeah,
Bob, I think in general, active ETFs, you can't talk about ETFs without thinking about active management right now. I know it's a big focus at this conference. Over 75% of all ETF launches in 2023 were active. But I think most notably within the active ETF space are, portfolios that have options embedded strategies within the portfolios.
Go ahead, keep going.
So thinking about those 75% of ETFs that were launched last year, 70% were either active equity or equity derivative strategies.
So active's really hot. Tony, last year ETFs, I know that use option overlays. That was a really hot topic. They collect premiums, you protect against the downside. But is there still a market for those kinds of products in a rising market? They don't outperform. Is there still a market for that?
Yeah, as Ali said, there's no doubt almost 23% of all flows last year were active, and options-based ETFs have grown quite fast. There's 2 use cases, Bob. One is for income. The second use case is for downside protection. So we actually launched the Parametric Equity Premium Income ETF. It has almost a 10% yield, and it protects on the downside. Or there's clients who want to re-risk their portfolio. They're watching the equity market go up. They want to get out of a 5% CD or 5% money market account, and they're doing it through these option-based strategies through the Nasdaq and through various other exchanges. So that's definitely a trend we're seeing as well at Morgan Stanley.
Rob, what do you think about this? I mean, those of you who don't know Dimensional is a very big, I call you index plus advisor out there. You have a lot of index-based stuff, but you have a sort of an active overlay on top of that. How should investors think about these active option ETFs? What's the right way of sort of looking at them?
Well, at Dimensional, we're really focused on factor-based investing, the premiums that you're pursuing. A lot of people think about premiums, size, value, profitability, but let's not forget about the most important premium of all, which is getting that equity market exposure. And so when we think about strategies that are utilizing derivatives, maybe selling off your upside to give you a little bit of income protection on the downside, you really have to target a very specific outcome. You have to have a specific outlook on the market. We think, and as you've seen over the last couple of years that's been supported, is the better way to do it is just go with the market overall, with, of course, some good implementation and some of that thought leadership.
Yeah, it made sense. After 2022, the disaster that everyone saw, everybody rationally said, how do I still stay in the market and protect myself a little bit? And these products made sense. But when you have this constantly up market, you underperform a little bit. It gets harder to sell those kinds of protection. But is it because the world's getting older? We're all baby boomers. We actually want some protection now, and we'll give up some upside if we have to. Is that the way to look at it?
Yeah. Well, if you think about it, and Rob's right in his comments, but there's 2 use cases. But the downside protection is really important. People want to re-enter the market. We launched a hedged equity ETF from Parametric, ticker PHEQ. What it enables an investor to do is get back in the market with up to 40% less volatility. So they might be capped on the upside, but they're certainly capping their downside protection as well. And this is really getting people off the sidelines back into the broad-based equity market. I think Rob's point, though, over time, people want to be in the equity market.
Yeah. Rob, I want to turn to you. Active ETFs, one growing theme. But what about those of us who basically hold long-term index funds, like me, old Bogle people here, and we're happy. So do active funds really advance the long-term investment goals for investors in some way? Can you make a case for that?
I can, and they certainly can advance that goal that you're seeking there. I think when we talk to a lot of investors about, well, what are you looking for in an index product? You're looking for well-diversified portfolios. You're looking for portfolios that are available at a low cost as well. You don't have to go with indexing to achieve those objectives. So what we do at Dimensional is we offer that well-diversified approach, focusing on premiums and implementation to deliver a superior experience. I think if you're an investor who isn't satisfied with just performing in line with or a little bit worse than an index, then maybe an active managed fund, the way that we do things here at Dimensional, is the right solution for you.
Alison, what's Nasdaq watching in 2024? What do you think is going to? Are we going to still have the options overlay business still strong? Is there?
I definitely think so.
Is something going to come out of nowhere that we didn't think about?
I don't know about come out of nowhere, but I definitely think there are some trends from 2023 that will continue to strengthen. One trend that I know DFA knows about quite well is the conversion of some strategies from mutual funds into ETFs. I don't think it's a solution or, an idea that every mutual fund would convert, but it's definitely an idea for some portfolio managers to take advantage of the ETF benefits. And again, yes, I do think the options-based strategies, we're seeing some managers that will license the Nasdaq 100 index, providing that tech exposure with option strategies on top. So, I think Nasdaq is well positioned as a listings venue, the index provider, and also having a flourishing index options
Nasdaq 100
business.
is the gift that keeps on giving.
It's been doing quite well.
It's amazing, like what you can do with that thing.
This year,
repackage it, sell it.
This year is the
derivatives
QQQ.
anywhere in the world.
It's the 25th anniversary of QQQ.